I will do live.
लाइव सर।
मैं स्टार्ट करूं?
यस सर।
यस। गुड इवनिंग इंडिया। दिस इज CA Bikash Bogi from Mumbai. I welcome you all in this special master class on new Income Tax Act 2025. So I welcome you all in this special master class on the new Income Tax Act 2025. Income Tax Act 1961, 65 years long blockbuster journey. And in the 65 years, Income Tax Act has seen country's progress, and the act has transformed over the years with the economic pace, economic development of the country. I guess there are many participants in this webinar who must have seen how Income Tax Act changed over the years. There are many senior chartered accountants watching this webinar, so they must have seen earlier income tax returns was getting filed physical. All the paperwork were completely physical. Subsequent to that, over the period of time, due to adoption of latest technology, now majority of the things got changed completely, and nowadays everything is based on use of high level technology. Income tax department started using an advanced level technology in the process of their work. But what was the need? Why a new income tax act? Why lawmakers thought about applicability of introduction of the new income tax act? So the idea behind new income tax act was first introduced in 2009 when then finance minister late Pranab Mukherjee has presented direct tax code bill, but subsequently happened with respect to this particular step. Great. Subsequently, a second bill was also introduced with respect to direct tax code bill. But recently, in last 2 years, Finance Ministry and Income Tax Department has taken significant steps to bring a new income tax act. So what was the need of this new income tax act? What was the reason behind this new income tax act? So in last 65 years, there were around 1,000 amendments or more than that, more than 1,000 amendments in the Income Tax Act 1961. Wherever Income Tax Department was of the view, or Finance Minister was of the view that something need to be brought in the act, they were bringing those things through the budget amendment, through the circular notification, press release, and over a period of time, Income Tax Acts started become too bulky. Income Tax Act 1961 was so bulky that it was, if a layman will read 1961 Act, they will get completely confused. There is no cross-linking of many of the sections. Even in case of many sections, there were numerous proviso, clause, sub-clause. Apart from that, some circular notification. So it was very difficult for a layman to understand the act. So the major purpose to bring this act was to simplify many things, to overcome this complex structure. Apart from that, many of the provisions were scattered everywhere in the Income Tax Act. So idea was that case, so if if there is some section with respect to particular topic or issue, so those sections should be given at one place. Apart from that, over a period of time to time, due to amendments, drafting becomes very cumbersome. And there were many interpretation issues. There were lots of litigations, many multiple times. So, in case of income tax litigations, there are thousands of litigations, and wherever and every courts were taking a different view with respect to different issues. So, to overcome all these, there was a need for a cleaner, simpler income tax act through which a layman, a aam aadmi, can read these sections, can read the act, can read the provision, and able to understand. Earlier in the old income tax act, there was a concept of previous year and assessment year. Like in the previous, if the previous is financial year, previous year and financial year is same. So previous year 2025-26. Then the assessment year will be 2026, 2027. For a CA student, for a chartered accountant, for a tax consultant, these things are very normal. For a layman, for other taxpayer, for a businessman, they were getting confused with the previous year and assessment years. So, to bring the structure clarity, what they did, they removed the concept of previous year and assessment year. What they brought? Now they brought a concept of tax year. Tax year means year consisting of 12-month period starting from 1st April 2026. That's it. In sync with financial year. So, for the books of accounts, it will be the financial year. For income tax act, it will be tax year. So to adopt all these objectives and philosophy, the broader picture, broader theme in the mind of finance minister was that bring a regime which is simpler in drafting, simpler in adoption, ease of voluntary compliances through the use of technology. So just for your information, in India, income tax department is using advanced level AI technology for all their processes and work. So what exactly changed in Income Tax Act 1961 in 2025 Act in comparison to 1961 Act? So in earlier Act, there were 819 sections. You just imagine 819 sections, and in those sections there were thousands of proviso, sub proviso, clause, sub clause. So in aggregate, all these sections, if you make a total of all these sections, that it go beyond 3,000 or 4,000. So now they have reduced, and they in the new Income Tax Act, total number of sections is 536. Straight away 35% reduction in the number of sections. In comparison to old act, 14 schedules, so in the new act of 16 schedules. Rules, earlier act, more than 500 rules was there, so now they have reduced to 330 rules. And income tax forms. Earlier it was roughly 400 forms, which has been reduced to roughly 200 forms. Number of chapters in Income Tax Act, old act was 23. In the new act also it is 23. What they did, they just renumber everything. Renumbered as per the chronological way. So what exactly they did in the new Income Tax Act 2025, all sections has been renumbered. All forms has been renumbered. Rules has been renumbered. And apart from that, they have made lots of changes also in comparison to old act. And the tax department was of the view that they are going to implement this new tax in couple of years. So they've started bringing all these changes in last three, four budget amendments. So many of these amendments, through the amendment, they have already incorporated many of the changes. So in this presentation, I am going to discuss, in today's presentation, I am going to discuss the broader changes which has made in Income Tax Act 2025 in comparison to Income Tax Act 1961. I try to cover up as much things as possible in a simple way, and I'm not going to go in deep for each and every concept because amendment changes are too much, and it's very difficult to cover up everything in the in this short time. I will take questions. If any of the audience is having any questions, they can write in the YouTube chat box. I will cover up all those questions after completion of my presentation. I will try to cover up as much question as possible. For the ease of understanding, I have divided my presentation into five parts. So in the first part, I will broadly cover all the changes related to the respective heads of income: salary, house property, business income, other sources, capital gains. Then another part will be the ITR, TDS, TCS refunds. Another part will be assessment, reassessment, recomputations. Then another part will be appeals, revision, dispute resolution, and last one will, in the last, I will cover up all other miscellaneous provisions. So let's start with salary. So what broader major changes they made in the salary? So as comparison to Income Tax Act 1961. So there is a welcome change in case of HRA exemption. So like we know that how the HRA exemption is getting calculated higher of the three. So out of which the 50% of the HR, 50% of the salary, 50% criteria is applicable. In the earlier act, it was applicable only for salaried person living in metro cities, Mumbai, Delhi, Kolkata, and Chennai. Over a period of time, income tax department got this realization that other tier two cities like Bangalore, Pune, Hyderabad, Ahmedabad, in these cities, cost of living has increased significantly, and so they should also get the benefit of higher HRA exemption. So now this city has also been included for higher HRA exemptions. Another small changes they made. So education allowance 100 rupees per month per child, just for the your information. This amendment was roughly in the year 1965 or 1917. So since last 50, they have not made any changes in this particular stuff. Education allowance 100 rupees per month per child, and hostel allowance 300 rupees per month per child. This provision was there in Income Tax Act since, in last 50 years there was no changes in this particular stuff. So what happened from this amendment? They proposed that this 100 rupees should be increased to 3000 rupees per month per child, subject to maximum two child, and hostel allowance 9000 rupees per month per child, subject to maximum two child. In case of calculation of perquisites, so they have made certain corrections. So earlier limits was also very low in comparison to valuation of motor car. So it was the limit. So it has been increased to 2000 to 5000 per month. So, and with respect to salary of chauffeur, so in that case, it has been increased up to 3000 per month for the exemption. Meal voucher, earlier meal voucher up to rupees 50 was exempt for perquisite calculation, which has increased to 200 rupees per meal. And gift coupons up to 5000 per year was earlier tax free out of the purview of perquisites. So now it has been increased up to 15,000 per year. A, a changes is proposed in with respect to medical treatment benefits. So earlier, if there was earlier if some employees who is having a gross total income of less than 2 lakh rupees, and if they are receiving any facilities for medical treatment outside India, so in that case, travel cost patient plus one attendant was out of the purview of taxation. So since over a period of time, this limit of 2 lakh was set many years ago. So they have increased this 2 lakh limit to 8 lakh rupees. So if someone is having GTI of less than 8 lakh rupees, and if their employer is providing any medical facilities to them, then this medical facilities shall be out of the tax purview. In case of leave travel concession, so rules, some relaxation has been given, and some rules has been tightened. So earlier, in case of leave travel concession, only national carriers were allowed. So now there is no such restriction for national carriers, and earlier some routes were specified. So now they need to take the actual fares based on shortest route and entitled classes. Apart from that, every employee who want to take the benefit of leave travel concession, they need to file one form number 124. Earlier, all these stuffs were getting through a simple declaration to the employer. Now, if you want to get LTC exemption, you need to file form 124. If there is no form, then your employer is not going to allow that benefit. Business income. So as such, there is no much corrections, changes in the business income. So department has brought one presumptive taxation scheme for non-residents providing services and technologies. So government of India got this need for electronic manufacturing in India, and just to promote foreign participants to come India and to do the manufacturing activity in India. So what they propose that in case of any such non-resident service provider, if they are providing electronic manufacturing facility in India, then in that case, their 25% of the gross receipt shall be treated as taxable income. And that 25% shall be accordingly taxed as per their slab rate, or based on as per their tax rate. Here they have not specified non-resident service providers, be it I don't know so whether they may be individual or a company, or yeah. So we are expecting some kind of clarification in this point. So at this moment there is no. They have only written that non-resident service provider for technology. And in case of business income, so they've rearranged the sections. So I have just given a table, so where you can see that in comparison to earlier act, what new section they have brought, and just for easier reference and to make to clear the confusion. So they have compiled all the section at one place. Capital gains. So as such, there is no such amendments in capital gains. So whatever amendments the finance ministry was proposed, the income tax department was proposed. So all these amendments has been categorically brought in the 1961 Act over a period of last 3 to 4 years. So now, and all these things has been synced in the new income tax act in a proper shape. So now, as per new income tax act, so short-term capital gain on equity tax rate will be 20%, LTCG will be 12.5%, and exemption. So in case of LTCG, 1.25 lakh exemption limit will be there. And so with respect to category of short term and long term, in case of financial assets, if asset is held for less than 12 months, it will categorize as short term, and if the asset is held for more than 12 months financial asset, then it will categorize as long term. In case of other assets, 24 months, less than 24 months short term, more than 24 months long term. So I have given a table, the comparison of sections, that what was the earlier section and what is the new section. So in the new Income Tax Act 2025, they have changed all the section numbers, all the rules number, all the forms number. So if you are a practicing chartered accountant, if you are a CA student, if you are a businessman, so you need to keep one referencing guide where it will show that what was the old section, what was the new section. So that referencing, cross-referencing from old act to new act will help you to identify what is the section. There is not such broader changes in the content or intent of many of these sections. There are corrections, changes in few of the sections, but in majority of the cases, there is no changes. So what you need to do, you should keep this referencer guide with you, and accordingly you need to apply, because Income Tax Act 2025 is live from 1st April 2026. So you don't have any choice to wait. So income from house property is, as such, there is no changes in the income from house property. Only section number has been changed. So earlier we were calculating section 24, 22 to 27. So now it's a section 20 to 25. So all the concepts is same. Only the section number has been changed. Income from other sources. So there is one changes with respect to the definition of virtual digital assets. So in last couple of years, through the budget amendment, finance minister has brought the taxation of virtual digital assets. But in those definition, crypto assets were not specifically included. So through this amendment, so they have brought the definition taxability of crypto assets in the category of virtual digital assets. So whatever this definition says, any crypto asset being a digital representation of value that relies on a cryptographically secured distributed ledger or a similar technology to validate and secure transactions. So this amendment they have brought keeping in mind the technological changes over a period of time. Another definition, so in case of definition of relative, the definition was very broad, but that definition was not covering a couple of crucial aspects, and there was some confusion. Time to time, various courts has taken some view with respect to those stuffs. So earlier definition was saying that in case of any individual, relative includes brother, sister, lineal ascendant, descendant. But lineal ascendant and descendant was not defined properly, whether maternal and paternal relatives will cover in both the things or not. So now through this Income Tax Act 2025, they give the definition, they give the clarification that in case of relative, your maternal as well as paternal relative both will cover. So now if you will read the definition, then there will be no ambiguity or there will be no confusion. So I've already covered all the heads of income. So now let's go through the changes in the ITRs, TDS, TCS, and refunds. So TDS. So TDS is not going to be very tedious in new Income Tax Act 2025. So in Income Tax Act 1961, there were 70 sections, 70 different type of TDS provisions which were covered in the section 192, 194. So earlier section 192 was covering salary. So this 192 has become 392, and all other TDS provisions becomes 393. So what they did, so earlier there were 70 to 75 different categories of TDS payments. So what they did, they have given a table along with section 393. In the table, they have covered everything. So now, earlier the TDS payment mechanism was based on the type of payment, whether you are making payment 194 salary or professional payment, commission or contractual payment. So now the payment shall be based on resident, non-resident and others. How the transaction will occur in the TDS regime? So you are in the month of April 2026 and you need to make the payment of TDS of 31st March 2026. So the last date of making the payment of 31st March 2026 is 30th April 2026. But since new act has become operational from 1st April 2026, then how you will make the payment? So they have clarified through some FAQs that in case of transaction, payment of credit on or before 31st March 2026, old act will be applicable, and payment of credit on or after 1st April 2026, the new act will be applicable. So this is very the so from the point of view of the tax consultant, from the point of view of the chartered accountants, from the point of view of the from the point of view of CA students, financial year 26-27 is very crucial because in this particular year there will be transaction with respect to financial year 25-26 and transaction with respect to tax year 26-27. Income tax portal is going to provide support with respect to both the laws. So you can find forms with respect to old laws also. You can find forms with respect to new laws also. Advanced tax. So as such, there is no changes in the advanced tax. So section number has been changed or so for income earned up to financial year 25-26, that is up to 31st March 2026, it will be charged as per Income Tax Act 1961. And for the transactions for tax year 26-27, Income Tax Act 2025 will be applicable. Self-assessment tax refunds. Yeah. So self-assessment tax MAT credit. So again, the concept is same. So any tax payment with respect to period before, on or after 31st March 2026, that is transactions up to financial year 2005, 2025, 2026, old act will be applicable. For all the transactions executed on or after 1st April 2026, new act will be applicable. In case of any taxpayers, if they are having any MAT credit, unabsorbed MAT credit, that MAT credit will be allowed to be carried forward in the new act subject to their available number of years for the set off as per the old act. Annual info AIS form AIS has been changed, so they have for the use of technologies, so they have renamed it as Evolved AIS, and I guess this will include more transactions also for data mining and all other stuff. So all refunds due under Income Tax Act or transaction period up to financial year 2025-2026 shall be governed by the old Income Tax Act. Any refund for tax year 2026-2027 shall be governed by new Income Tax Act 2025. Income tax returns form. So as such, there is no procedural changes except section number and forms. So all the returns filed up to financial year 2025-26 shall be governed by old act. Like in case of financial year 25-26, the due date will be 31st July. So return will be filed. Then these returns will be processed as per old act and the refund will be issued. Scrutiny and proceeding, all other things shall be as per the old act only. Returns filed for tax year 2026-27 shall be governed by new Income Tax Act 2025. So apart from that, there is no changes in the ITR forms, ITR process, everything is same. So I've given just a summary of a few of the important forms. So if you are practicing chartered accountant, so I think Form 15 CACV very close to your heart. So now forget about Form 15 CACV. So now you need to adopt Form number 145 and Form number 146 in your heart. So for practicing chartered accountant again or corporates, so now tax audit, Form 3CA, 3CB, 3CD, ABCD removed. So now it's Form 26. So they have just changed the form name. So for a practicing chartered accountant, for a senior consultant, senior students, it will be very difficult to unlearn all these stuffs and then relearn all these stuffs. So now we are like whenever we are handling these stuffs, even the clients are referring can you take the exemption under section 54 or can you take the deduction under section 80C or can you issue the form 15C. Even the client was telling about this. So now even the client will come and say okay, which form I need to file or yeah. So we need to learn about all these numbers. Content is the same, process is same. So you just follow. You need to keep a checklist with you, which form number was the old as per old act and which form number is as per new act. So I think this information is readily available in the income tax portal. So if one wants it, they can download it from the income tax portal. Ready referencer is there in the income tax portal. Assessment, reassessment, recomputation. So again, so section number has been changed. So this is very important. And apart from section number, few things also got changed. So which I will cover in my subsequent slides. So this is one of the most important changes in the Income Tax Act 2025 for which taxpayer across the country should be worried. And this is the real changes. And all the taxpayer, all the chartered accountants should know about what exactly happened here. So let me first go through how income tax reassessment reopening was taking place in the Income Tax Act 2025. So earlier in the earlier act, whenever income tax officers were getting some information that there was some income has escaped assessment, so they were sending notice under section 148A that we have this information that you have this undisclosed income. So kindly share your view. Kindly explain why this income should not be added as your unexplained income and why as reopening proceedings should not be started against you. Based on the so cause, the taxpayer was submitting his reply, and based on the reply, whether if the officer was satisfying with the reply, then his case was getting dropped, and if the officer was not getting satisfied with the reply, then case was getting reopened with prior approval of joint or additional commissioner. And then the reassessment proceeding was going on as per the process. So this was Income Tax Act 1961. Now in the new act, what they did, there are three things. So earlier reopening was made based on risk system strategy. So risk system strategy means income tax department through their data mining through the advanced AI technology, if they are getting some information that some transactions, if some claim has been, if the taxpayer has claimed something which is fictitious or which is wrong, and they got some information through their risk system strategy, then they were reopening their cases through the process. Audit objections. So wherever department's internal team were reviewing the document, and based on those review, they were checking that in case of some of the transactions, assessment order has not been passed properly. So in that case, they were reopening the cases. Information from foreign country. So Based on these three criteria, they were earlier reopening the cases. So now, what happened in income tax 2025? What changes they are proposing? They are proposing that if there is some direction received from approving panel. So what is the approving panel? This is the part of panel related to general anti-avoidance rule, popularly known as GAR. So even chartered accountants know about GAR. This GAR is one of the most draconian provision in the Income Tax Act. So what exactly GAR is? So suppose you are a taxpayer, so you have done some tax planning just to save the taxes. So what GAR will do, if subject to certain conditions, if the approving panel think that the taxpayer has done this tax planning to avoid the tax, then they can treat your transaction as same transaction and they can reopen your case. Another thing, if there was some finding from the court with respect to either your matter or with respect to some other matters. So if they are getting some information from any of the court, then they can reopen your case. And another thing, faceless collection scheme. If they are getting some information from faceless regime, so then they can reopen the case. What is the most important point here? In the earlier regime, they were supposed to give me so-called notice that we are proposing to reopen your case. So kindly give explanation why your case should not get reopened. In case of these three scenarios, they will reopen your case without giving any so-called notice. They will straight away open the case. If they are having the information, they will straight away open the case. So I personally think that this will open a Pandora box of litigation. And here this with respect to this particular stuff, there will be trust deficit among taxpayer and the tax department because you cannot violate principle of natural justice. If you are having any information, you give the so-called to the taxpayer, na? Give them an opportunity to represent their case. How you can reopen their case without giving an opportunity? So technically, I feel that tax department should think about it. That they should provide an opportunity of personal hearing. They should provide an opportunity of representation to the taxpayer that your case is supposed to be proposed to be reopened and you give your reply that why your case should not get reopened. So they should not violate principle of natural justice. This is my opinion with respect to, but this is the provision which is going to impact taxpayer at large. Suppose you did some transaction just to save some amount of tax, then if it will come under the purview of GAR, and if the approving panel thinks that you did all the transaction just to avoid the tax. I'm doing the tax planning. If something is written in the law, I'm doing the tax planning. Then how you can say that I'm doing this tax avoidance just to bypass the law? If something is there, if I'm doing something by following the all the provisions of law, then how can you? So this again will open a box of litigation. Timelines for assessment and reassessment. So in case of in comparison to all act, so they've increased timelines by 1 year almost in every cases. So why they have given this timeline? Because there is one cooling period so that in case of 1 year from the end of the year, there will not be any notices issued by the department. So apart from that, so in aggregate earlier they were allowed to reopen the case within 3 years from the end of the assessment year. So now, since it was the end of the assessment year, that's why they have added one more year. So now, so if your escaped income is less than 50 lakh rupees, they can reopen your case within the period of 4 years from the end of the tax year. Suppose, let me give an example to you. So, tax year 2026-27, that is financial year 2026-27. So, your reopening can be made from 31st. So, you need to calculate 4 years from the date of 31st March 2027, 4 years. So, by the end of 31st March 2031, they can reopen your case with respect to transaction entered in the tax year 2026-27 if your escaped income is less than 50 lakh. And if the escaped income is more than 50 lakh, then this 4 years will be replaced with 6 years. Yes, so again, there is some changes in the penalty subject to certain requirements, subject to certain conditions. In case of few of the penalty clauses, so what they exactly did, like in case of in any other penalties as per the old act, so there was a provision that they need to give so cause notice before imposing the penalty. They will give an opportunity to represent their case before the why the penalties should not be imposed in your case or so and so. So in case of certain cases, they have removed this opportunity of personal hearing. What power has been given to income tax department in certain cases that now if certain conditions will get fulfilled, then in all those cases they will impose penalty straight away. Again, I am feeling that this is a bit harsh. Even whatever be the scenario, you cannot violate the opportunity of personal hearing. So even Article 14 of the Constitution says that the right to hear, everyone is right to hear. So you cannot hang anyone just because you are having some information and someone is given some, yeah. So you should technically department should give a so cause notice to the taxpayer that in your case, in their case, they are having these information, so we are likely to impose penalties. So if you want to say something in your defense, we are giving you 10 days or 15 days. So you submit your reply, else there will be no reply, then we will impose the penalty. So this is quite logical. But if you bring the provision like this, if in case of this scenario, I'm going to impose penalty straight away, then I think it will be a bit harsh for the taxpayer. And the overall idea behind the introduction of this new Income Tax Act 2025, just to bridge the gap between the taxpayer and the income tax department, or to simplify and to create bonding between the taxpayer and income tax department. So even these small things can create trust deficit. This is my view. I hope I hope the tax department will listen to this and they will bring some appropriate changes in the new act. Transitional framework. So this is very important. So how the old litigations will be covered in the new Income Tax Act. So let me give a clear summary. So I think if you go by because I think this chart is a bit confusing. So let me explain you in a simple language that in case of any litigations for the period on or before 31st March 2026, old Income Tax Act 1961 shall be applicable. In case of any litigation for the period starting from 1st April 2026, new Income Tax Act will be applicable. Suppose in your case, there is a reopening notice for the period financial year 24-25. Even I am getting this notice now, the proceeding will be conducted as per old Income Tax Act. Income Tax Department's portal will support old and new income tax provisions, forms, rules, and all the processes till the time this transition period will go on. So, for a taxpayer, for practicing chartered accountant, for students, 2026, 2027 will be a crucial year because there will be lots of issues with respect to this transition, and there will be lots of confusion. So I am personally hoping that के income tax portal should run smoothly to capture all those stuffs. One more thing which I have missed out in my earlier slide. So before start of this slide, so I want to just add, like in case of payment of advance tax and TDS and self-assessment tax, 2026, 2027 is very crucial year, and there will lots of mistakes. As a practicing chartered accountant, as a tax consultant, we need to be aware. Like if you are making payment of advance tax or TDS for the financial year 2026 2027, you need to select tax year 2026 2027. Do not select assessment year 2026 2027, because if you select assessment year 2026 27, then it means this transaction will pertain to financial year 2025 26, and then you need to go pillar and post to do the corrections in the challan. So this is a warning. Like, so if you are doing any transaction, because payment of advance tax, self-assessment tax, TDS, these are the regular compliances. So one should be aware critically. Okay, for current year, you need to select tax year. If you are making any advance tax, self-assessment tax for the financial year 2025-26, you need to select assessment year 2026-27. So we need to take care of this particular stuff, and we should be alert so that there shall not be any adventure. Appeal. So, so as such, there is no such changes in the appellate structure. So appellate structure is the same. Scrutiny, CITP, ITAT, High Court and Supreme Court. Again, they've changed the section number, so you need to keep a referencer guide along with you. So just for the reference, I've given the section number, comparative section number, for the benefit of my audience. Appeals. Now you will ask a question, how the old appeals will be governed, and whether the old appeals will be waived off, or how these old appeals will be taken care of in the new Income Tax Act. So it is clearly explained by Income Tax Department in their, they have issued a detailed FAQ which is available in the Income Tax portal, so one can go and check it. So they have given clearly that in case of all the appeals, in case of all the appeals, in case of all the appeals pending for the period on or before 31st March 2026, that is for financial year 2025 2026, that is assessment year 26 27. Any appeals or any other litigation pending before AY 26 27, financial year 2025 26, for the period on or before 31st March 2026 shall be governed by old Income Tax Act. It is very clear. And with respect to transactions executed from 1st April 2026 onwards, new Income Tax Act shall take charge. So this is the broader summary. If you go in detail, then you will get confused. They have written lots of stuff with respect in their FAQs that how this is going to happen. So, but I've given you this broader summary that you don't need to think. So in case of litigations on or before 31st March 2026, it will go as it is. You don't need to think about it. For the tax year, this current year is going April 2026, from 1st April 2026. So you will file the return of this particular tax year in the month of July 2027, or August or September 2027, and the scrutiny or subsequent, it will come in subsequent years. So you don't need to think much about the new Income Tax Act with respect to your old litigations. It will covered by the old act only. You don't need to think much about this, that what exactly happened here. Dispute resolution. So this is a welcome change. So what is a dispute resolution committee? So in case of earlier CIT appeals regime, so there were lots of pendency due to the regime change from physical to faceless. So the Income Tax Department brought one alternative dispute resolution panel, that is dispute resolution committee. And this dispute resolution committee was given the power to waive the penalty and prosecution. Now, this is very important. In the new Income Tax Act, what they made the changes. So now they have given the power to dispute resolution committee to modify the tax variation. Suppose in case of any taxpayer, income tax officer made an addition of 25 lakh rupees and that addition was abruptly wrong. So now you have two options. Either you can go CIT appeals or either you can go to dispute resolution committee. If the dispute resolution committee think that the addition made by the income tax officer was grossly wrong, what they will do? They will pass an order directing the assessing officer to delete those additions. So this power they have given to dispute resolution committee, that is equivalent to CIT appeals, but this will be subject to certain terms and conditions. So which are the matter which can go to dispute resolution committee where total income, returned income is less than 50 lakh and the disputed tax demand is less than 10 lakh. So basically, they are catering small issues here so that these small issues should not clutter the time of CIT bills. Apart from that, advanced ruling, so there is no such changes. So they have just changed the section number. Search and seizure. So they have made certain changes in search and seizure. So earlier, in case of search and seizures, they were doing seizure of books of accounts kept in physical form or digital form or any other form. So now, due to the technological changes, due to the use of technology, income tax department can seize or take control of any digital record, like your Google Drive, your Google Sheet, your Dropbox, your uh, OneDrive, or any other your cloud network, cloud. Your if you have Amazon Web Services server or some any of the server where income tax department think that you can save your data. Your data is saved in any of those stuff. So now they are having the authority to seize all those stuffs. So they will seize your physical, they will seize your digital assets also. So now I'm coming to other miscellaneous provisions, so which are also very relevant. So there are a couple of other miscellaneous provisions. So I've categorized those changes in various categories. So I will cover up one by one. First, such changes is lower deduction certificate. So in the earlier Income Tax Act 1961, the TDS officer was having the power to issue nil rate certificate. So now in the Income Tax Act 2025, they have done away with this criteria. Now income TDS officer will not issue nil rate certificate. Suppose your tax liability is zero. So instead of nil, he will issue 0.01% rate or 0.02, whatever he will take the minimum rate of tax. Apart from that, earlier in the earlier regime, there were no clarity on the whether I have suppose taxpayer has filed an application, so whether that application they can cancel suo moto. But earlier there was no such provision. So what was happening that the application, suppose I have filed as a taxpayer, I have filed the application and that application was pending in the desk of TDS officer and that application pending for many months. So now what they did, the assessing officer will cancel my application after providing no opportunity of being heard. So earlier it was not there. Another amendment, another changes proposed in the new Income Tax Act with respect to losses brought forward and carry forward. So what was the provision earlier that in case of if we want to bring the losses brought forward and carry forward, so in that case, 51% of the shareholding should be common. Earlier, what was happening that in case of loss carry forward, there was a time gap between the loss carry forward and loss set off. And in this period, there was change in the shareholding. So there were certain courts which have given the favorable decision with respect to the taxpayers that in those scenario, you need to see the shareholding stuff when you are setting up these losses. So now tax department thought that this is a lacuna and there was some drafting error. So what they are trying to do here, what they are saying, okay, now you can carry forward and set up the loss if and only if your 51% shareholding is intact from the date of loss carry forward to the date of loss set off. So suppose you have carry forward 2 years ago, and in these 2 years, suppose there was change in shareholding, and now after 2 years you want to set up the loss, and you have changed the shareholding again to make it 51%. So in that scenario, you will not able to carry forward that loss. Trust. So in case of trust, so earlier there were multiple provision trust, NGO or Section 8 company and society and all other stuff. So now they have consolidated all those sections in one broader category, NPO, no, non-profit organization. So I've given a comparison of old section as well as new section. So if we see the section comparative is given. Content is exactly same. There is no changes in the logic. So they have simplify the language and logic process is all same. Yes. So this is a very important slide, and this is a slide where the taxpayers should be worried about. In 2014 and 2015, budget speech. Then Finance Minister late Sri Arun Jaitley has categorically made a statement before the Parliament that Income Tax Department will not bring any retrospective amendment which is going to impact taxpayers' right. So in the Income Tax Act 2025, Income Tax Department is brought to such retrospective amendment, completely overriding many of the judicial case law case decisions. So this, I think that this is not good. If department want to bring some amendment, some changes, they should bring it prospectively. Like here in this case, so in the earlier regime, what was happened that in case of reopening, there was some confusion that who is the valid authority to issue reassessment notice in the faceless regime, whether the income tax officer of faceless regime will issue the notice or judicial assessing officer. So in many cases in last 5 to 6 years, jurisdictional assessing officers has issued the reopening notice, and that notice was without a proper jurisdiction, and courts across the country has taken a view that since the income tax officer has exceeded his limit of jurisdiction, hence the reopening proceeding is completely bad in law because this has been issued due to lack of proper authority. So Bombay High Court in case of Hexaware Technologies, Guwahati High Court in case of Ram Narayan Shah versus Union of India, Madras High Court in case of TVS Credit Services, Sri Cement, Rajasthan High Court, Karnataka High Court in case of Exotic Innovations Private Limited. So all these courts has taken a similar view that wherever jurisdictional assessing officer has issued reopening notice, that reopening lacks jurisdiction and hence the entire proceeding is bad in law. In the new Income Tax Act, what changes has been proposed? They have clarified that jurisdictional assessing officer always had the power to issue a notice and for reopening under section 148. And what they told that this changes should apply retrospectively with effect from 1st April 2021, effectively overturned all these High Court rulings. So you just presume that these taxpayer fight pillar and post that with respect to these illegal or invalid notices, and they have successfully fight it before the Bombay High Court or various high courts. Now, tax department is bringing some amendment retrospectively. So this will again create and open a Pandora box, and this will again create a trust deficit between the taxpayer and the tax department. Another important changes that earlier in the faceless regime, the law was that whenever a tax department is issuing a notice, that notice should contain a proper DIN. What is a DIN? DIN is a system generated document identification number which should contain in every document, every notice is issued by the tax department. So what happened in last couple of years, in last 5, 6 years, that in case of many of the reopening notices, tax department has issued the notice, and that notice was not having a date. And again, courts across the country has taken the view that since these documents were not having proper DIN, hence these reopening should be invalid. And any order passed with respect to this proceeding should be quashed immediately. So what tax department brought the changes? What they are saying now, non-quoting of DIN is a minor defect for which you cannot treat the entire assessment invalid. And what they are saying that this will apply retrospectively from 1st October 2019. Because what they are saying that these are the procedural aspects, procedural lapse, and for which they are now, after 6 to 7 years, they are now again planning to penalize the taxpayers. So again, this is the trust deficit. So I think tax department should consider this, and instead of bringing these stuffs retrospective, they should consider it whatever changes they want to make. They ideally it should be prospective in nature. So I have quoted the budget speech. So this is the budget speech of late former Finance Minister Arun Jaitley, where they have categorically stated in the parliament that we will not bring any retrospective amendments. So yes, so what shall be the practical challenges for this particular stuff? So in case of all favorable judgments with respect to particular taxpayer, now due to these amendments, all those decisions will become null and void, and the tax department will issue a fresh notice reopening their cases. And this will again contradict the commitment given to them earlier. And this will lead to gap of trust deficit between the taxpayer and tax department. In the Through this new Income Tax Act, tax department wants the taxpayer's life easy, want to bring more transparency in the system, more clarity. But these types of retrospective amendment is going to face a challenge, and it is going to have an impact on the taxpayer's mind that how matlab, the thought process of the tax department is to avoid litigation or to create more litigation. So it is, I think, only the time will tell that how it is going to take place. But it is a law and it is effective from 1st April 2026. So guys, with this, I'm completing my session. So I would like to take, so if anyone is having any questions on YouTube, so anyone is having if any queries, I will try to take as much question as possible through the YouTube chat. So if you are having any questions, you can write down in YouTube chat. I'm there, or if I will not able to cover up all the questions in the through the YouTube chat, you guys can connect me over LinkedIn. So my LinkedIn ID is given there. So apart from that, Income Tax Department has issued a detailed FAQ, and in Institute of Chartered Accountants of India has also issued FAQ. These FAQs are available in the respective portals of Income Tax and Institute of Chartered Accountants of India. So if anyone wants the copy of these FAQs, though I can share with them, you can connect with me directly over LinkedIn. So now I'm going to take questions through YouTube if there is any questions. Yeah. Can you show
हेलो.
me the
हाँ सर.
yeah. Can you show me the YouTube?
हेलो.
Yes, yes, Sanjay
हाँ
ji.
सर. हाँ सर, वो कुछ पूछ रहे थे सर आप. कंप्लीट हो गया
हाँ,
सेशन.
हाँ, session is complete. So now I'm taking the session the questions in YouTube. So can you give me the mobile? So someone is asking for PPT, PPT of
एक
this
क्वेश्चन.
presentation.
एक क्वेश्चन है, मैंने भी चैट पे भेजा सर आपको.
हाँ, हाँ, हाँ. There is some confusion on TCS. Who is asking this question? Shiv Kumar. So someone is Shiv Kumar is asking this question that there is some confusion on TCS on scrap sale. Is it 1% or 2%? So it is 2%. So it's not 1%. And yeah, if I think someone is asking for the presentation, this PPT. So you can connect me over LinkedIn, and I will share with you personally. You can share your mail ID with me over LinkedIn. So I will share the presentation with you over your mail. Any other questions? Yes, Ajay ji, any other questions?
नहीं सर, वो कमेंट्स है कि आपका सेशन बहुत अच्छा रहा है, बहुत
Okay,
यूजफुल
thank
सेशन है. ये 2-3 कमेंट आए अभी सर.
okay. Thank you. So I think if there is no such question, then I think I'm concluding my session. And thank you everyone who has joined. I hope I was able to explain this in a very simple, explain it properly. Amendments are quite wide, so I think it is advisable for users to go through the FAQ issued by Income Tax Department as well as FAQ issued by Institute of Chartered Accountants of India. This will give a broader idea. I have just given a brief overview of the entire steps. So if you want to go in deep, so you need to go through all those documents, and if you want to get documents, so you can connect me personally. I will share those documents with you. So guys, with this, I'm closing my session. Thank you for joining. Have a good day.